David, you're also a little bit of a disruptor, right? So you have a good sense of actually what the banks are getting right, what the banks are getting wrong. Will we see challenger banks? Will we see more technology being deployed, actually challenging the kind of big established banks?
I think so. One thing that's definitely clear is that the gloves are off. If you go back over the last 30, 40 years, the traditional days of branch banking are over. Technology is allowing new entrants to come in, whether it's neobanks, startups, people taking part of the value chain to just do payments or deposits or Forex, whatever it is. There's so many business models being deployed every single day that certainly the Bank of the Future looked very, very different to what it does today.
But at the same time, they're so regulated. Right, and so I speak to big chief executives and they're like, no one wants this job because they're overly regulated. Is there a part of the market where you can actually have good returns, which isn't as regulated as the big ones?
I think the regulation is a very good thing, clearly for the industry overall. It does enforce a discipline around the industry. It does force those that play around the edges of the banking ecosystem to act in the interest of the consumer. So regulation is a key asset. Our view is that the future of the banking is very, very good for the existing banks. They just need to wake up, take advantage of modern technology and have the agility of an Apple or a Google or an Amazon, because they've got the key assets, they've got the customers, they've got the reputation, they have the product set that they can sell to those customers, and they can overcome the regulatory burden. They have the capital. So provided you play to your strengths, your customers, your regulation, you can do extremely well, but you do need to empower yourself with modern technology, and that's our message to the industry.
Okay, so David, how will you deploy cash?
Okay, we deploy our cash organically in our business model. What Temenos do is we sell banking systems. Our solution does two things. If you look at most banks today, the systems they use to run their banks are spaghetti. It's the last industry in the world that writes its own software. So we put our systems in, replace the spaghetti, and allow huge, huge cost savings. The other thing we do, which is probably more relevant today, is allow banks to become digital. In the face of the new competitors you're seeing coming in, these are banks that understand the power of technology. We provide digital solutions so they can go out and compete in the new world.
But if you're not digital, do you even survive? I mean, I'm always stuck on my phone, right? How do people bank through mobile phones? So what comes after that? This is kind of a story that we all know about.
That's very interesting. There were almost three waves of banking. I'm not sure you do survive, to answer your question specifically. If you're not digital, if you don't understand being digital means digital right to the core, you've got a big problem. The three waves of banking were: one, branch banking. Then everybody started to shut their branches and move down to mobile and internet channels. They quickly realized that you actually have no relationship with your customer if all you do is force them online. So what the big trend in banking at the moment is analytics, understanding your customer, their buying behavior, recommending a next best product, becoming a true trusted advisor to your customer. If you do that, and then you've got the products, maybe your own, maybe somebody else's products, to service them, you provide that Amazon-like experience, if you like, that trusted advisor relationship.
What's going to make my life easier? I mean, I'd love actually not to have a credit card anymore and have everything on my phone. So is that Apple that's going to make money out of it?
Different parts, different solutions to different parts of the value chain. If you look at some areas like banking, it was all about friction. So now you have people like PayPal coming in, you do your KYC checks once and then you're done. You flip your phone and you buy things. So in other areas, it's quick decision making on loans, mortgages, good deposit rates. Each part of the banking ecosystem has been done quite badly in the past by the traditional banks. The newcomers are coming in and they're finding the friction, the pain to every single part of that value chain, and they're coming up with business models that are really disruptive in payments, in deposits, all of those different areas. Each one has a different solution. All of them can be fixed with technology, and that's what we're doing with our 3,000 customers around the world.
Do you think you'll be part of an M&A consolidation phase, and will you be bought out actually?
I'd be very surprised. Temenos is the leader in our industry. What's interesting is consolidation tends to happen in an industry as it wakes up. Banks have been asleep largely for most of the last 30 years, and they're now waking up to the need to be digital. Temenos is leading the pack. We're by far the world's #1 core banking vendor. We sell more systems than anybody else in the world.
So Barclays and all the likes might want to buy you. I mean, have you had any offers from the big banks saying?
I can't comment specifically on M&A, but we're not. Software companies don't tend to get bought by banks. Software tends to be a winner-takes-all game. If you look in history at software, people like Microsoft, SAP, Oracle tend to dominate their industry. They have scale, they industrialize, they productize, they sell the same software over and over again, and they tend to lead an industry. So our view is we'll continue to be a category killer as we are today and create a very, very sizable software company independently.
Will you buy anyone?
We keep looking. We do. We buy occasionally small.
How much money do you have to spend?
We're a public company, over $10 billion of market cap. We have access to debt funds, but first and foremost, we're a technology company. We like to build things properly. Our first choice would be to build software properly with our relationship customers that works. Occasionally, we can take shortcuts on things like moving into a new geography, something that's moving extremely quickly, like analytics, for example. But mostly, it's organic, and it's worked so far. It's made us the leader so far.
So I mean, is size critical? How big do you want to be in 2 years?
We're definitely big enough. We're definitely big enough now to be the leader. Don't forget, what we're proposing to a bank is the most critical decision they will ever make. First first time ever, they will take out the spaghetti and they will put in a package. It's all about trust. The fact that every 2 days somewhere in the world goes live, somewhere in our package, makes a huge difference. So we're big enough now to be leading the industry. It gets easier from here on in. The challenge has become how to help the industry really transform.
Spaghetti's is the wires, right?
Spaghetti is wise, exactly.
I knew that, but I just wanted to make
spaghetti.
sure. I know. I just wanted to make sure all of our global audience also understood that. David, it's been great to have you on.